And we're back, and I'm back, and I am here with absolutely one of the top five most famous Blake Griffins. Are you
Yeah,
number two, would you
definitely. I
say?
think number two. Yeah,
That's pretty good.
yeah. And
Yeah,
unfortunately, going to be hard to dethrone number one.
that's
But
pretty good. Yeah. So you're at Interact Analysis. You're a research manager, as we were talking before, and we brought you on to talk about perhaps the most thorny and complicated topic in the
yeah,
next, I guess, 14 minutes or so.
yeah,
So, those people who have been watching for the duration of the week have watched me try to be very diplomatic about this, sort of touch on it and I assume, you feel this way too. For good reasons, it's difficult to talk about tariffs and not get somewhat political, really.
yeah. I mean, when you're thinking about tariffs as an issue, it's like an inherently politically driven issue, right?
Yeah.
Like they don't exist if not for the politics surrounding them. So yeah, it's difficult to do objective analysis and not lean into the political analysis side of it, because again, it's the primary driver behind it.
Yeah. Yeah. If you're saying it's good or bad, you're suddenly political,
Yeah,
basically,
yeah,
right?
in a sense, yeah.
Yeah. But I think that, I like to be pragmatic about these things, and I think that certainly there can be good outcomes, but
Mm,
right now, we were using the word uncertainty before. Right now, it's a very sort of scary time, especially because it's like, I don't even know if there will be a tariff on my country,
yeah.
my industry, and it seems to be changing, if not daily, then weekly.
Yeah, and one thing I think outside of tariffs, so everybody's focused on tariffs, right? The administration's policy outside of tariffs, there are some things that like to be optimistic about, I would say. So one is the accelerated depreciation program that they're bringing back as part of the tax code. So some of the uncertainty that we'll get into that's like causing a bit of a decline in capital expenditure could potentially be offset by that coming back online. That had been present in the first Trump administration, got reduced in the Biden administration, and it's now they're talking about putting it's called like the bonus depreciation of 100%. So basically, you'd be able to expense some of the investment that you make into capital expenditures. So
I think it's one of the more interesting things about being at a show like this, because you have the manufacturers themselves and then the people who manufacture for the manufacturer. So the vast majority of people in this room are being impacted by exactly what we're talking about right
yeah,
now.
absolutely.
How have your conversations been this week?
Yeah, it's really interesting. So you get wrapped up in like the headlines around tariffs where there's rampant uncertainty, and then you go talk to people that are actually involved in this on a day-to-day basis. And I would say it's more positive than I was expecting. It could be because there's like a stocking up there's a perception that stocking up is occurring in the market ahead of tariffs.
Stocking up in terms of inventory?
Yeah, so if you're a component manufacturer, their customers may be trying to order now before tariffs go into full effect and things become more expensive. And you've kind of seen that reflected in the data already. But Q1 was up, and everybody that I've spoken with have basically said that they expect growth for the year for their business.
Throughput was up, you mean? Like
I'm sorry?
the manufacturing throughput was up for Q1?
Production, yes.
Production, yeah.
Production was up in Q1. Yeah, and so going forward, I think there's still an expectation for growth from most of the component vendors I talked to. I would say on like the machine builder side, it might be a little bit of a different story. There is a huge expense associated with buying these machines, right? And when things are as uncertain as they are right now, it begs the question of whether people that are making those decisions are going to be comfortable with that capital outlay. So the machinery sector might dip further than the component sector or the manufacturing sector, but
because it's just a big box of components, and 90% of the components now are made either certainly in Asia. I know there's a lot of production happening in Vietnam. Taipei has always been really big, and increasingly we're seeing in India, but so much manufacturing happens in Shenzhen specifically.
Yeah, absolutely. And fortunately, I think a lot of the lessons learned from that post-COVID spike, supply chains are more robust now than they were 3 years ago. There's been a lot of nearshoring efforts. A lot of the manufacturers here will have plants in Mexico. Not to say that Mexico's immune, but it's definitely not the same issue as looking at China in terms of the future of tariff policy.
Yeah, that's interesting. I spoke to earlier today a CEO of a company based in Toronto, and it could be good for depending on how it works out for Canada. Yeah. It could ultimately be good for them as well.
Yeah, potentially. I mean, so I spoke to one vendor who has recently kind of moved a lot of production to Mexico specifically. And one of the benefits that they're seeing right now is that they can basically still manufacture and bring these components in that aren't subject to the previously 120%, now 30% tariffs from China. So they're able to still produce and manufacture at a relatively low cost. And the labor in Mexico is still very, very cheap. So even with that added tariff, they stand to produce a product that is not ungodly expensive to produce.
So, I mean, would you say that generally it's positive for U.S. companies, for companies to move to like any part of North America?
I think nearshoring has been highlighted as a trend and something that is important to do outside of tariffs. I think it is something
the supply chain broke, and we're in Detroit, and there are a few visuals that will always stick in my mind from the pandemic, and one of them was those aerial photos of like running tracks with all of the trucks that they couldn't sell because they just couldn't get the chips for them.
Yeah.
It just had a huge impact. So yeah, I mean, the timing is really good on that part. Would you include automotive in that list of companies who are making a concerted effort to nearshore?
Yeah, I would think so. To be perfectly honest, I'm probably not an automotive expert compared to some.
You're my only expert right now. Unless anybody on that side knows. No, okay.
A lot of the companies I work with traditionally have been like component manufacturers. So when I look at the manufacturing environment, the people that I'm speaking with, it's predominantly coming from kind of a component viewpoint. So I mean, you can look around and there's 100 companies surrounding us right now that I would speak to. But yeah, automotive is a bit of an anomaly to me. To that.
Again, I can't speak for it either, and I've been primarily covering robotics. But to make things very simple, a lot of these at this point are basically big robots. So there's got to be some overlap between that.
I think when you're looking at the automotive sector, like it's been struggling for some time, particularly in Europe. Like German automotive manufacturing has been down the last couple of years, and it's really hit the industrial automation sector hard because that's such a massive, important industry. So there already have been probably some production moved as a result. I think tariffs will play a factor in that, but beyond that, it's hard for me to comment exactly.
So which industries would you say are primarily focused on?
So industrial automation, I don't think of it as an industry necessarily, but it's a all-encompassing area. Yeah,
right. Yeah.
I mean, a lot of different areas. So we look across a wide range, and most of the reports that we cover are the reports that we produce. So we'll look through process manufacturing, discrete manufacturing, and all the different sub-industries within those. Automotive being one, but it's not the core focus of the research, I would say.
How specifically? Well, let's start a little bit broader.
Yeah.
How is the industry how are the parts of the industry that you cover? How has that evolved since 2020?
So it's actually a really interesting question, especially when you consider from a components perspective. So 2020, right? COVID, terrible year. We saw a production dip double digits, but then it rocketed out of 2020 and 2021 and 22 to the point where everybody was basically struggling to produce in time. So a lot of share was passed around on the basis of being able to actually produce these products. Fast forward to now, so that has kind of gone away. The new order volume that led to like overinflated inventories basically led to orders dropping off a cliff in 23 and 24. So you had this like big spike and then this reciprocal pullback.
Yeah.
And now you're kind of on the other side of this huge ripple that occurred over the last couple of years, and you're starting to see growth returning in production. So like when we were exiting 24, there's actually like really strong momentum coming out within U.S. manufacturing. I think now with tariffs, it like could potentially upend that momentum for 2025. At Interact, like we are expecting this to negatively impact the previous forecast that we had for industrial production volume. So
it's specifically for the year, right?
Yeah,
for 2025.
Yeah.
Do you project? I know obviously this is like asking somebody to project the weather in 2026. But how confident is an analyst group like yours in projecting things out like even further than that?
Right. I mean, obviously, every forecast is always wrong. I think that's something that you have to like just
do
accept.
The opposite of
you try to look at what information you have today and make the best guess or make the best estimate as to what's going to happen. I would say like as you go further out, it becomes more forecasting along the long-term trend line. It's very difficult to no one forecasted COVID, for example. Even the inventory problem that I was describing in 22 and 23, like that was a new dynamic that we hadn't really seen before. So suddenly all of our models became decoupled from the underlying production, and there was this huge force at play that was really impacting all the markets that we were covering. So yeah, to put it short, the longer out the forecast, we are pretty confident in it, but it's a difficult thing to do. We don't have a crystal ball.
So what? How are you feeling then about the longer?
As it relates to manufacturing generally? And
everything we talked about.
Yeah.
You know, I know the tariffs are obviously day to day, so that's a tough one.
So, I mean, manufacturing generally, like we do expect this kind of tariff-related shakeup to have an impact over the next several years. So 2025 is the year that we've tried to tie down first. We definitely think it's going to be a reduction off the baseline, but we still think it's going to grow. So our forecasts and the data set that we cultivate, it's called the Manufacturing Industry Output Tracker. We've revised it down, production in the U.S. from 3.5% in 2025 to 0.9%. So quite a big drop from what we had it before the tariffs were announced. As you go into 2026, it kind of starts to climb back into that upward growth because the uncertainty kind of wanes.
It's a regression to the mean in a sense.
Yeah, in a way. I think the one thing that I personally am viewing as a risk for 26 is the Fed chair is up for renomination. The Trump administration has historically been put yes men in certain cabinet positions.
They're very corporate friendly, I guess I would say.
Yeah, and I think the rhetoric that's come out of the administration right now surrounding the Fed chair and the kind of attacks that he's made on the Fed chair indicate to me that he could potentially put someone in that position that could potentially have a policy decision that might not be in the best economic interest.
Or maybe like hasn't been studying that exact thing for their entire career.
So that to me is a risk to 26, right? And those are always the things that we try to think of. We look at it, try and approach forecasting from a measured perspective, but we have to consider these big potential changes to the economy, and that represents one, in my opinion.
But I mean, were you right after the election? Because obviously there was talk about tariffs prior to the election. We knew that.
Yeah.
I don't know that we knew the extent, but we knew that this was going to happen.
Yeah.
Is like everybody in your office kind of scrambling to like rethink the year?
No, I don't think we're scrambling necessarily. I think it's less about the tariffs that were enacted, more just like the changes that have happened over the last 3 months. So we knew tariffs were coming, right? But we didn't know that they were going to be as drastic and broad sweeping as they were.
So it's like secondary impacts of the tariffs rather than themselves. Yeah.
I mean, it's just raised uncertainty. No one can plan effectively. That's what it effectively comes down to. Like, how are you going to have confidence, like investing millions of dollars in an expansion if you don't know what's next in terms of economic policy? If something's going to revert in the span of a week, like you just don't know. So one of the indexes I showed it's been written about pretty heavily in the economic world, but this economic policy uncertainty index, it's a really interesting number to look at. So it looks at the 10 most read newspapers in the U.S. and counts the number of times, the number of articles that contain the word uncertainty, economic, and policy, or like some variation of that.
That's interesting. Yeah.
And it normalizes over an index. And the goal is to say, here's, generally speaking, how uncertainty is.
It's like those word clouds that you see. Yeah,
sort of. Yeah. So if you zoom out, so if you look over the last 3 years, the uncertainty is higher than it was during the pandemic right now, which is mind-boggling to think about. Like, we are less certain about economic policy in this country than we were in May of 2020. It's
Yeah, so we only have a minute or so. So I'm going to ask you to predict a big forward-thinking question. But in terms of the conversations that you're having, especially with people around here, obviously they're getting their game plans together, and then their plan B and their plan C and everything else. But what kind of trends are you seeing beyond just the numbers in manufacturing, specifically in the U.S.?
Trends relating to technology or relating to
Sure. Yeah. I mean, like, I'm sure everyone's talking about humanoids and AI and all these other things.
Yeah.
Like,
so
how is technology going to transform manufacturing?
So I think manufacturing is still going to be a good area for everybody here to be involved in. It is volatile, as we'll see, but it'll still be a growth area. If you look at some other sectors that are related to automation, so warehouse automation is a really good example. Everybody around here is making a play within that space because it is the high growth area right now. So all the AMR, AGV vendors, that's going to continue to drive growth and be kind of a safeguard against the volatility that you see in manufacturing. That's going to continue for a long time. I think as long as we keep demanding goods arrive at our door in 6 hours or less, like we're going to see more automation start to
as long as Amazon still exists.
Yeah, basically, yeah.
Well, Blake, thank you so much. It was
thank you very much.
pleasure.
Yeah, it was a pleasure.